Kalispera Anthropos, welcome everybody to O Economica, all about economics and finance. Very happy to be with you all today. If you're new around here, please subscribe and thumbs up, like the video, and leave a comment if you can. So, again, one more content on the fiscal situation of the Exchequer, the UK finance minister going into the budget. Why I'm doing all this stuff? Because I found it interesting, and I continuously find that there is a lot of disinformation in the mass media. Probably because nobody takes the time to go on the ONS and actually see the data and try to understand something. So what I will do next, I will take the link of the ONS page, I will stick it on the video description so that you go there, click on the link, and take the data, because I'm really fed up with all this stuff. Anyways, so how was the fiscal position going into the budget? There was a surplus, there was a deficit. Was it true? Was it false? What were you talking about? What is that? What is the other? Right. So there was a deficit. There is a deficit everywhere, because the government always spend more than they take in tax, because they need to do some investments. They need to do stuff, and so there was a deficit in the third quarter, in the second quarter, in the first quarter. I don't know where they saw any eventual surplus. Probably was on a month basis, on a fiscal year, I don't know. Anyway, it's very easy to see here, 2025 Q3, total current receipts, total current expenditure. That's central government. Let's take the we can take column D here, or we can take the we have here the total final amounts, but for argument's sake, let's see this one here. Let me just narrow so we have more space to see. Okay, so the intake of tax in the third quarter is 290 billion, not only on tax. There is also public corporation, and I will say something in a while. Then there are all the expenditure, running the fire brigades, running the people who are who are actually running the whipping stuff, or the department who are running the cabinet. Okay. And the pension and the benefits for all the MPs, the laws and stuff like that, it costs 294 billion. So if my income is 290 billion, I'm spending 294 billion, I don't have a saving, my account goes into an overdraft of minus 4 billion. So that it's negative saving, it's a deficit, it's not a surplus. Okay. Then we subtract with the depreciation, which is the rate of depreciation of the capital investment does the government, and we find that the current budget deficit is 20 billion. All right? That's without investment, without borrowing to invest, because the primary account deficit, the headline deficit figure, is larger. So if we see here, column J, we have the total including banks, and the deficit is 20 billion 938 million. That was Q3 2025, so just a month ago. By the end of October, for the 3 months till October, there was an excess expense of 20 billion. But the real net expense is this one, negative saving of minus 3.2 billion. Because then what you're doing, you're adding back the depreciation. What you're doing saving minus depreciation, and you have the current budget deficit. Here you have a saving of 400 million. Here you are running an overdraft of 4 billion, 4.2 billion. So the net overdraft was 3.2 billion. But in the current budget deficit here, okay? And we have to we learn together a very easy thing, okay? When somebody comes up and say, okay, the deficit was 10%, 9%, was the surplus, the fiscal surplus was 1%, 2%. There are two levels. There's the current budget deficit, which is the pure receipts, which I like to write like that, like receipts and write it like that, minus expenditure, okay? Receipts minus expenditure. Is the pure current account flow, cash flow, okay? So that's the current budget deficit or surplus. Depends. If you are intaking more tax than you are spending, then you have a surplus for the current budget, surplus or deficit. But on top of that, we have current receipts. Okay, it's very easy. After that, we have the borrowing, the additional borrowing, minus total expenditure And here we arrive at the deficits as a percentage of GDP. Okay, we can measure in percentages measured with GDP, because if we measure the deficit, the additional borrowing as a percentage of the total receipts that the government takes, then it's a bit of a problem. So the headline deficit percentage is the total expenditure, are the current receipts, so all the tax intakes, all the government income, minus the total expenditure, which is not only the current expenditure, is the total expenditure is the current expenditure plus not capital, what can I say, plus borrowing plus investment. Okay, plus investment, let's call it investment, minus interest on debt. Okay, so that's the what you wanna, let's say you wanna call it primary account deficit or surplus as a percentage of gross domestic product. Okay, I apologize for the writing because I'm using the mouse, I'm not using a pen. Then there is the secondary account. Secondary account, which includes the balance of payments. Okay, this is what I've been learning, reading and learning. Okay, so I'm not teaching you anything, but it's a bit of clarity, so we all refresh our mind and we have more clarity about things. So the balance of payment includes the trade in goods and services. Okay, so you're selling financial services abroad, you are importing tomatoes from Spain, let's say like that, or you're importing Guinness from Ireland, and that's the movement. Then there is another thing which we can add, which is the financial account. The financial account, it includes the net financing position, which can be a deficit or a surplus, and that includes the assets, all the investments that UK firms own abroad, vis-a-vis or net for the assets that foreign businesses own in the UK. So if you have an American multinational that buys a mega store, a shopping mall, or it buys Boots, or buys any private equity firms that owns a supermarket, a food store chain, or all these kind of things, or a financial firm which owns a financial services company in the city of London, but the owner is an offshore company, all that kind of stuff. So the foreign direct investment into the UK, whether it's physical investments or the financial account, like people who buy UK debt, who own UK stocks, but they are foreign investors, so all that goes into the financial account. Okay, and we are talking about 12 trillion pounds. But here there's a deficit, here there is a deficit, and here there is a deficit. Okay, so whether it's the primary account deficit, the primary account deficit is a percentage of GDP, or the secondary account surplus or deficit is a percentage of GDP, or even the financial account, the net external debt or surplus, there are all deficit all over the places. I'm not just saying that it's bad. I'm only saying as it is. Okay, of course things can fluctuate. Okay, you can go from a deficit to a surplus, but the basic thing is that there are two different kinds of fiscal deficit. There is the one in the current receipts and expenditure, and there is the other one, total managed expenditure compared to the total current receipts. And you can see that here the current budget deficit is 10.4 billion. But if you go down the net borrowing or the net cash requirements, it's 32 billion. Okay, or if we go down the line here, okay, here becomes 1 billion. And okay, the net additional borrowing that comes after the deficit is 35.9 billion here. Okay, because what do we have? We have current budget deficit for public sector, including banks. Okay, then you have gross fixed capital formation, which is investing into doing capital investment, building the hospital, building the power plant, building the solar farm, building, I don't know, a school, whatever. It's then becomes an asset on the government balance sheet. Then you have depreciation of these assets, of these investments. Then here you have capital grants to private sector. So the government not only builds its own assets, does investment, it also finances the private sector. You can have a joint venture when there is a strategic, like for example, the government can partially give money to BAE Systems, all those strategic things, an energy company, or those who do the research for the power plant that uses basically is exploring or is trying to build the nuclear fusion power plant, so the tokamak technology, so all that kind of stuff. So the government gives grants in money to private company, and that happens also in the United States. I don't know. The United States, whenever the federal government stops spending money, you will see that Tesla will plummet because they receive subsidies to sell their electric cars or to sell their solar panel packages for. Then you will see that the whole the defense industry will collapse, like Lockheed Martin, the NASA, Palantir. Palantir revenues will collapse, even for two reasons. One, it can be that the government spends money on these companies, so it buys services from Palantir, grants contracts, or buys stuff from Lockheed Martin, etc., 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 or it even grants money, funding for projects which are shared with private company. Okay, so it's a public-private partnership in doing some stuff. Okay, so to do all these things, gross capital formation, we subtract the depreciation, then etc., etc., then you have a total net investing of 14.9 billion. So the government needs another 15 billion, more or less, to do all the investment side of the balance sheet ledger. So the net borrowing at the end of the fanfare is the current deficit plus the other expenditure. So this figure here, these amounts here, are those that, when taken into a ratio with gross domestic product on an aggregate level, will give you the deficit, the headline deficit, which is taxes, income, receipts, and investments. So it's total expenditure minus total current receipts. Okay, and you have a surplus, or most of the time a deficit, because it's very difficult to have so much tax receipts that you are able to pay for the machinery of governments paying for the health service, all the public services, to pay for social contributions, etc., etc. And on top of that, you are able also to fund investments. Okay, so that's why all the time there is a deficit. But a deficit, it's in money terms, it's money supply. It's additional money that the government borrows by issuing debt, and that money then it's distributed into the economy. It can be in form of welfare state. No, it's not in form of welfare state. It's distributed in the economy in the form of investment. Then if you want to say, oh, the welfare state is that and the other, that's another kettle of fish, because those are the current expenditure. Okay, so if you want to shrink the social benefits or the subsidies or anything that you don't like, then you are going to take a sledgehammer to the current expenditure. Okay, so that's the choice of any person, but I don't have a judgment on anything. Okay, so yeah, pretty much it's this kind of thing. Now, if we see here, for example, general government, we have total managed expenditure, and we subtract with the current receipts, then the net cash requirements is 33.3 billion pounds. These 30 billion pounds, they have to be borrowed, yeah? So there is no surplus, okay? Now we can go down here and see in which manner, okay, they have other financial transactions which are not defined. Okay, Bank of England, okay. I think here, so what happens is that including public sector banks, okay, so the Exchequer needed to borrow something like 32 billion, 32, 30, 33 billion, okay? But what happens here is that we have some cash flow movement from the Bank of England side. So here we have net borrowing 35.9. Then they are lending, so they are giving money to private sector, almost 5 billion. Then net acquisition of company securities, they spend another 9.6 billion. Then they have these two things. So it's something that comes from the Bank of England, which means that they received, or they, no, I don't know if they received something, but net adjustment for interest on gilts, they subtract this expenditure and they subtract 45 billion. So then it comes up that the net cash requirements, it's 1.7 billion. So this has something to do with the Bank of England and an adjustment on gilts on the interest side of payment, because here where we have, okay, here you see interest and dividends paid to private sector. So these are the interests on servicing the debt. So the outflow in the expenditure only for the third quarter 2025 was 33.2 billion. Then down the line they discounted it by 3 billion, and then it comes in some other kind of financial transaction, which is, I don't know, some rescuing from the Bank of England. I don't know what happened there. Yeah, definitely here the Bank of England bought some gilts, bought some debt, and they adjust the interest paid on gilts here. No, the interest paid there. So definitely there is a sort of stealth QE or something. I don't know. I don't want to speculate on anything, but these are the mechanics. You see here other financial transactions. So these all are on minus. So these are all netting out the borrowing, the additional borrowing, and by the end of the column here, you see that the net financial transaction here, other financial transaction, minus 45 billion. So at the end, it comes up that the own account net cash requirements, it's 1.1 billion and 790 million. But on a cash basis, without the extra help from the BOE, it was 33 billion and 400 million. So there is the Bank of England, it's easing something, I don't know. There are other things going on which I'm not privy of any particular information of any kind, but if you are an humble person as me and you just go through the numbers, you can see how things evolve. Now, another thing which is interesting, always on the Bank of England thing, is that 299,774. Well, okay. So, if I'm not wrong, the interest and dividend paid to private sector, if we basically create a ratio between the interest paid to the total current receipts, we get up to something like 11%. So it means that the government, like quarter on quarter, it's spending between 10 to 11% only on servicing the debt, in proportion of all the tax money that it's able to take as an income. But there is another thing. If we see the income side, we have here public sector, public corporation, and pension scheme. So, and we go here. Okay, so for these two columns, corporation and pension, the amounts, the final amounts, they are with a plus. So it means that they generate a cash flow for the Exchequer. And it's public corporations. So if there are large corporations which are owned by the state, these are able to, at least in Q3, they have generated 3.5 billion in revenue, okay, or in saving. And the pension, so the welfare state for the public sector funded pension scheme, they generated a surplus of 757 million. That's very important because it means that the retirement situation, it's in a surplus, so still it's somewhat affordable. It does not require additional cash that needs to be borrowed or something like that. So you can argue about the triple lock, but here that you have a net surplus, it's good. It means that there are more contribution than pension outflows, the payments to pensioners. Okay, there are more contribution from the working force than payments going out to pensioners. And here it's interesting because it brings an argument. A theoretical argument is why we don't have a water company which is owned by the state or by the public, or why we don't have a rail company or transport company which is owned by the public. It could be a positive thing as long as it generates more saving. So all in all, to say that public corporations which are owned by the state not always are a disaster. Here they are generating a saving, so a gross operating surplus. Okay. In Q3 2025 there was no surplus, there was a deficit. You can call it 1.7 billion, you can call it 33 billion. There is a lot of money in between, but there was a deficit. And the same is for the second quarter or the first quarter. So there are no special situation or things to hide or stuff like that. I mean, okay, these are the data for the second quarter. Okay, so already you see that there was here general government. You have in the second quarter you have a very wild current budget debt. So the saving, you have already 32.5 billion overdraft between receipts and current expenditure. Then depreciation 48.4 billion. So it's truly a lot of money. And the current budget deficit, including public sector banks, 50 billion. So you tell me, where is this surplus? I don't know. And when you add also the investment side of things, then another 13 billion in additional cash requirements. So the net borrowing in the second quarter, it was of 63.4 billion pounds. Okay, and here again the same magic trick. Adjustment for interest and other stuff. So own account net cash requirements is 12.4 billion. So yeah, it's basically, what do we have here? It's this adjustment. It's adjusting some sort of excluding the bank's cost. Then the borrowing comes down to 12.4 billion. So if we don't want to mess around, the net cash requirements for the general government in the second quarter was 47.4 billion. Then you can net the transaction for including or excluding public sector banks, and you can get to another amount. But on the government side, excluding Bank of England transactions, without accounting for Bank of England transaction, there was 47.4 billion. Then we want to exclude here adjustment on interest for yields and other financial transactions, then the net cash requirements is 12.4 billion. But still it's a deficit, okay? Or it's 47 or 12 billion, I don't mind the amount, still is a deficit, all in all, okay? So all this mumbo jumbo to find out that there was no surplus in 2025. So yeah, Q1 2025. Okay, so net cash requirements in Q1 2025 was negative. So you could theoretically argue, okay, so we can do this thing which is very funny. Okay, no, we cannot do this. We cannot do that because then we have to link the first quarter with the previous quarters. But anyway, Q1 it's always a strong month for tax receipts because also all tax money, also self-assessment money go in, and you can see here that you have a large surplus in the first 3 months of the year. Tax intake 318 billion. So on a current receipts and expenditure level, there is a 37.6 billion surplus. Okay, so theoretically, what that means is that because the government manages to take the bulk of tax collection in the first 3 months of the year, whatever is the tax surplus in Q1, okay, that would mean that, oh dear, 37,641. Okay, so let's do something which I would define austerity, which means that let's set aside this stuff. So the government here has 37.641 billion to play around, billion pound, and it has 3 quarters to go. So divided 3, it's roughly 12 point something billion per quarter of cash that they can use. So if you want to have a very tight fiscal policy, you could take the first quarter total amount of revenues that you have, and then you can spread it for the following 3 quarters, and you have to manage to balance any funding gap and do any additional investment. That would be the purest form of balancing the books, having a really tight measured expenditure by using the first quarter surplus that the government is able to generate. So more or less, these are the overall things that anybody can find on the ONS website. I can do another thing just to which I did it before. Where it is? Okay, I believe it's here. Okay. So lending, expenditures, and revenues. Okay. So here we have the ONS table for the amounts of total receipts, total expenditure. So I managed to divide it by fiscal year. So I have April, June, September. So not the solar year. Okay. So for example, in the past fiscal year, 2024-2025, the net borrowing requirements was minus 164. So the government needed to borrow 164 billion, etc. Here in the previous year, the other lot needed to borrow 159 billion and 500 million, so forth and so on. You can do this calculus. Now, if if we take 164 billion divided 2.884 trillion pound, okay, yeah, we get to 5.7%. So that is the deficit number headline that you would see on the BBC or on any website which records the total expenditure of the government vis-a-vis the total receipts. Then the net lending figures, you put it in proportion of the whole GDP, and you get to a percentage. And so you see that the primary account deficit compared to the overall size of the economy was 5.7%. And if you go on if you read the OBR documents, they projected that UK GDP, UK deficit, primary account deficit, for the 2024-2025 fiscal year was between 5.1 5.7%. So we are in the ballpark of the correct figure that also the OBR estimated. But that's to learn together how to see the deficit. Okay, so you can take the ESA table, 2,500, and you see what is the net lending, and then because these are for every 3 months, you would have to sum from April to March next year. You get to the total amount of the fiscal year, 164 billion. You do this simple proportion ratio between the net cash requirements, which can be borrowing, or if it's a lending, it's a surplus. So the net borrowing requirements, additional borrowing requirements, in proportion to the overall size of GDP, and you get to a percentage. That number is the official deficit figure. So it means that theoretically the government has added to the stock of debt something around 5.7% or something like that, 5.7% in proportion to GDP. So that's all for me, and I will add the link of, so there was no surplus in any quarter before the budget. There was no surplus in the previous fiscal years. The deficit also that the OBR found, it's in the ballpark figure of 5%, 5 something percent. And yes, thank you so much. Subscribe to the channel, and see you to the next video.